That silver, the silver ore, it turned into a new divine weapon, 6. This is China's silver sword, ready to strike down trade competitors hard. That's because silver is one of the minerals that China controls the most in the world, about 70% of the global supply. It's produced in China, and now China is suddenly restricting silver exports. So you might ask, just how important is silver? Well, it's actually used in a lot of industries. In fact, any industry in the world that needs electrical conductivity has to use silver. So if China restricts exports, it has a big impact. It affects the whole world. More importantly, silver isn't just used in the industrial sector. Silver is an asset, and it's a very popular asset too. Last year, people said gold was hot, right? Gold went up 70%, but silver went up 150% last year. So the question is, if China decides to restrict silver exports, what will happen to silver prices? And another thing about silver is that how does this fit into the global economic strategy today, and to what extent? Another thing I really want to know is what's actually going on with silver prices in the market. If you've been following silver prices, you might wonder, hey, why is silver on the Shanghai Gold Exchange in China so much more expensive than silver on the COMEX market in the West? So which price is the real fair price? In this video, I'll tell you if we understand silver. If we dig a little deeper, we won't just see the price or which part of the silver cycle we're in right now. We'll also start to notice patterns that keep repeating during this period. For example, the risk that no matter which country or industry you're in, if you rely on resources from other countries, especially from competitors, and suddenly the resource owner decides not to sell to you, that's a real issue. This is another important condition we need to pay attention to. If that happens, honestly, we're in trouble. For example, if China suddenly decides not to sell silver anymore, like I mentioned in the Science Money Monster clip, which you can support via the QR code here, every single bot and satong you contribute will go directly to supporting our channel's team. This allows us to create content as independently as possible without anyone controlling us when there shouldn't be any control. Or you can easily support the Science Money Monster channel just by liking, sharing, or commenting to chat with us. And what I'd really like most is please hit the subscribe button, so if I upload a new video, we'll get to see each other again. Thank you. All right, so China has just pulled out a new silver sword, so to speak. What's going on with that? Why is China so good at monopolizing things? How do they manage to do it? Like, suddenly China announces they're not selling to the whole world, and everyone's just shocked. Honestly, I haven't actually seen firsthand what goes on in China's industry or how much they really produce. I just read about it in papers too. And according to a report from Morningstar, China controls up to 7% of the world's supply. That means they're number one by a mile. No one else even comes close. And the reason China has the whole world going, whoa, what's happening with silver, is because out of the blue, China announced they're going to restrict silver exports. Seriously, when China said that, industries all over the world, not just high-tech industries, freaked out together. So in this video, I'll explain why that is. But first, let's get to know silver a little better. To be honest, silver wasn't really that popular until last year. So in 2025, silver gave a return of at least 50%. Of course it became popular. There are two main reasons for this. First, do you know what makes silver cooler than gold? Silver is better than gold because it's actually used in real industries. It genuinely creates economic value and is used to make real products. That's why silver is considered one of the world's superstar resources, especially in modern industries. Whether it's solar cells, EVs, electric vehicles, right? Data centers, electronics, military applications, or satellites, silver is one of the best electrical conductors in the world. That means if we didn't have silver, all those industries I just mentioned would run into serious problems. This is the point where silver is truly essential for industries all around the world. That's why the way silver prices move differs significantly from gold prices. Take gold, for example. Sure, it's used in some industries, but to a much smaller extent than silver. So when gold prices go up, there's a limit. investors might start to say, you don't have to buy gold right now because it's expensive, unlike silver, which is truly needed in industry. So no matter how expensive silver gets, people still have to buy it because it's essential for industrial use, right? That's why in the past several years, the price of gold could be held back. Gold prices could be suppressed, but silver prices couldn't. And because silver is a commodity whose price can't really be suppressed, no matter how expensive it gets, people still have to buy it. Economists call silver an inelastic supply good or a necessity with inelastic supply. Like I said, industry has to use it. So no matter how expensive silver gets, people still have to buy it. And if you ask whether the price of silver will go up even more, it's definitely possible. Right now, China actually has ways to pressure the Western world into having to raise the price of silver too. But I'll put a pin in that for now. I'll explain more about it in this video. And if you think about the future world with AI, automation, robotics, and things like that are definitely coming. So the demand for silver will also increase. So it's also possible that the price of silver will go up. And what's happening right now is that all of a sudden, China has announced that they don't really want to export that much silver ore anymore. They'd rather restrict exports. And honestly, I'm not surprised at all that China is doing something like this again, because this isn't the first time. Just recently, only a few months ago, China did the same thing with rare earths. If they can do it with rare earths, why wouldn't they do it with silver ore too? So, with China restricting silver ore exports, who's affected? First of all, the entire global market. Pretty much every industry uses silver ore. Anyone who uses silver ore is going to feel the impact. Next, investors. When industries run into problems, it affects their revenue. And when industry revenues drop, investors are the ones who get hit. And finally, who else is affected? People who don't invest, don't hold silver, don't produce, or have nothing to do with silver at all, they're affected too. Why? Because if you go back to what I said about the first group affected, it's the entire global market. So even if you don't invest in silver or hold any silver ore, you're still impacted. For those of you following China or watching the Psy Money Monster channel, if you want to watch a long, in-depth video, almost 5 hours, check out the Medley China clip. If you really understand what's going on, you'll see that China is playing the global competition game in an incredibly shrewd way. They've spent years doing this, starting with dominating entire maritime territories, setting up strategies for both warfare and trade. Then they moved on to restricting rare earth exports, winning in solar cells, dominating the lithium market, and now, today, restricting silver ore exports as well. Honestly, this is a masterclass move. As for how China is going to restrict silver ore exports this time, it's basically like creating a monopoly. They're doing it so subtly, so gently. There's no aggressive announcement or anything scary. China just tweaks the rules a little, changes the law a bit to restrict silver ore exports. Basically, China just goes back and changes a few words on paper to turn silver ore from a regular export commodity that anyone can ship out freely into a dual-use strategic item. That means it's now officially classified as something that can be used for everyday general civilian applications, or alternatively, for strategic and military purposes. And once it's labeled as having a potential strategic or military use, exporting it to other countries is no longer a simple task and becomes a much more complex and difficult process. If you want to export silver ore, or if anyone wants to buy silver ore from China, it now has to be approved by the Chinese government first. It's not just about having the money to buy it anymore. In this case, China is saying, no, we're not banning anyone, we're not attacking anyone, we're not trying to hurt anyone. It just so happens that silver ore is related to China's national security. So from now on, when it comes to exporting silver ore, we'll just have to say, sorry for the inconvenience, but the truth is, it's not just going to be inconvenient, it's more like you won't be able to buy it at all. That's because China has changed the rules and made them even stricter, like extremely strict, dragon-level strict, making it look almost impossible to get approval. And even if you do manage to get through, in the end, it'll still come down to the phrase, approval is at the discretion of the Chinese government. And China, if they're going to wow, restrict the export of every single mineral from rare earths to now even silver, the question is silver really that rare? Can it be mined in other countries? If we just don't rely on China, don't buy from China, is that possible? Let me explain how silver is actually obtained. Silver doesn't mostly come from silver mines. Most of the world's silver doesn't come from dedicated silver mines. Instead, silver is a byproduct from mining other things, like zinc, other metals, and various other ores. Once it's extracted, it has to go through a refining process. And when it comes to refining silver, 70% of the world's silver refining, according to Morningstar, happens in China. That's because China is the factory of the world, so they mine all sorts of things, zinc, lead, and so on, more than anyone else in the world, which is why they're able to produce the most silver. So even if you mine silver ore in Australia or Mexico, in the end, there's a very high chance that those countries will still have to send their silver ore to China for refining and processing before it becomes a finished product. This information really makes me see the bigger picture of China's role, you know? It's like they control everything remotely, you know? Or is it because of their good behavior? Okay. So they sell minerals like rare earths or silver or whatever. Just put a label on it. Or if someone misbehaves, they tighten up the port. Hit stop. No need. You don't get any minerals at all. So this means that a country with a lot of money as in cash, might not have as much power as a country with minerals like silver or rare earths, because those minerals are used to produce industrial goods. They really do create real economic value, but money that's just printed on paper, what can you actually do with it? Just keep printing it. I'm not selling anymore. Now, since we're here, like I mentioned at the beginning, I have another question about the price of silver. Because the price of silver in China's Shanghai exchange and in the Western world's COMEX market, hey, there's a huge difference. So which price is the real true price? Do you know how different the prices are? Let me give you the data from December 24th at market close. Physical silver that you can actually hold on the Shanghai exchange was about $78 per ounce. Meanwhile, on the COMEX, which is the Western futures market for silver, the market closed at $72 per ounce. That's a $6 difference. That's a huge difference. You could actually do arbitrage with that. But before we answer the question of what the real price should be, let me first explain what the COMEX and a Shanghai exchange are and how they're different. Let me start by explaining the structure of the COMEX. COMEX is a futures market, which means it deals in derivative contracts. Most of the people trading on the COMEX in the Western world are large financial institutions, hedge funds, and the like. They're the ones trading there. So if you ask about COMEX, is there actually real silver? Yes, there definitely is. But on COMEX, silver is divided into two categories. The first is eligible silver, which is silver that already has an owner. Someone has already bought it. Eligible silver isn't counted. It's just stored there because it already belongs to someone. The part that is counted is called registered silver, which means silver that's available for delivery. There's about 120 to 130 million ounces of that. Is 120 to 130 million ounces a lot? If you just say it out loud, it sounds like a lot. But if you compare it to certain things, it's actually not that much. Honestly, that amount, just 120 to 130 million ounces, can be a problem. Do you know why? Because the volume of silver trading on COMEX is as high as 1.1 to 1.2 billion ounces per year. That means that 120 to 130 million ounces is just only 10%. There's only 10% real silver compared to the amount of paper silver traded on COMEX. Now, is this a problem? The answer is, it wouldn't be a problem at all if traders on COMEX aren't actually interested in getting the real silver. As long as they're satisfied with just trading contracts and making profits from paper transactions and keep doing that, it's fine. But it would definitely be a problem if all those traders suddenly wanted to withdraw real silver. That would be a disaster. But COMEX was designed this way from the very beginning. COMEX was never meant for traders to actually exchange their contracts for real silver or gold. It was never intended for people to come and take physical delivery, and it's been running like this for a long time without any issues at all. Until one day, someone made people realize, hey, there must be a problem here. And that someone was China. Out of the blue, China set up the Shanghai Gold Exchange, which stated that if you want to buy gold or silver, you should actually be able to take physical delivery. China made it clear, buy it and you get the real thing right away to take with you. Or if you want, you can leave it in the exchange's vault. No problem there. Do you understand now why the price of silver on the Shanghai Gold Exchange is higher than on COMEX? Because the silver price on the Shanghai Gold Exchange is for real physical silver you can actually hold, while the silver price on COMEX is just a paper contract. And what's happening here means that China is doing everything it can to force the Western markets to raise the price of silver. They can't keep pushing it down anymore, just like they can't suppress the price of gold anymore. But anyway, up to this point, if you've been following silver for a long time, if you've been in the market for a while, buying and selling gold and silver for years, you're probably still confused about how silver's price suddenly shot up by 150% last year. Let me emphasize again, it really happened. It's actually possible. Because normally, silver's price, honestly, is usually super lazy to move. It just sits still for like 10 years. That's what silver does. Before 1979, back in the 1960s, the price didn't go up at all. It barely moved. But then, suddenly, in the late 1970s, silver's price doubled. That was from 1979 to 1980. The price of silver jumped from $6 per ounce to $50 per ounce in just a little over a year. So when it wants to sleep, it really sleeps. But when it wants to run, it really takes off. It can be pretty wild too. And historically, there's a pattern, a cycle in silver prices. First, when the price of silver goes up, it could be because of an industrial revolution, with increased demand for silver in industry. When demand goes up, the price rises. In this case, the increase isn't so dramatic. It tends to go up gradually. The second point is when things get really volatile, when investors see, hey, the price of silver is climbing, it's really going up. And more investors start coming in, the bots will push the price of silver even higher. From just climbing, it'll suddenly spike up, reaching a really high peak. The third point is, once a lot of investors have piled in, the price will peak until the highest point, and once it hits that peak, no one can say exactly when that will be. After reaching the top, it'll move into level 4, which is when people start selling off to take profits. That's when, oh boy, anyone who bought at the top is going to be seriously stuck because the price will slide down. And in the final part of the cycle, it's the phase where all those speculators who FOMO'd in and got stuck at the top, they get margin called. That's when the price just crashes, and that's the end of the cycle before it starts all over again. Now, when the price of silver crashes like that, it doesn't mean the world or the industry needs less silver. It just means that the group of speculators has been wiped out. That's all. Last year, silver prices went up by over 50%. So where are we in the cycle right now? Should I just tell you? I don't know for sure, but it's probably the phase where speculators and investors are starting to come in. But what I do know is that right now, all of you are still standing at a major crossroads when it comes to currency, power, industry, energy, and technology. And ever since China started pulling out all its weapons from the very beginning, it's affected everything, even silver. This lets us see a certain pattern in investment strategies these days, which is called de-risking in a big way. Because if you look back to the 2000s, countries relied on raw materials from other countries. We were good at what we did, we produced, and we exchanged resources with each other. From around the year 2000 onward, that era was called globalization. But if today we still do business the same way, it wouldn't be called globalization anymore. It would be called de-risking. Because nowadays, if we're going to invest in something with someone, we have to consider this condition. Does that country or business rely on key raw materials from others? Especially if those others are competitors or even business adversaries. We really have to consider carefully that it might not be a good investment, because if one day the owner of the key raw materials for that business, like China, for example, monopolizes and controls rare earths and silver, and then suddenly decides not to sell them anymore, we're screwed.